Welcome, my sweet children and my lovely disciples. I've titled this video today, A Logical Way to Day Trade Forex. And what I'm going to do in this video is I'm going to show you how I day trade Forex in a very simple, just logical way that makes sense. But I'm also going to show you how you can do the same thing. And I don't mean that figuratively speaking. I don't mean that in a hypothetical sense. I mean that in a literal sense. I'm going to show you what you need to do, the actual steps, to be able to trade the Forex market, at least when you're day trading, in a real logical way that just makes sense. And the fun part about this is that it's going to be completely unique to you. I'm not going to teach you some little moving average strategy. I'm not going to teach you some Fibonacci pullback entry system. I'm not going to teach you to buy whenever the price is at the lower Bollinger Band or anything like that. I'm going to teach you something that transcends that first layer of just looking at price, that actually delves a little bit deeper into helping you really be able to grasp what's going on so that you can then be able to day trade the Forex market in just a reasonable, rational, logical way that makes total sense. The first thing I want to say is that trading is obviously really risky. And the truth of the matter is that 90% of you who are watching this video probably aren't going to make any money trading Forex. Now the stats and metrics say all sorts of different things, but it is the case that trading is risky and most people lose money. So you should consider whether or not you want to listen to anything I say, because I'm not a licensed financial services provider. I've just been trading Forex for the past nearly a decade, and I also do stocks and crypto as well. So I feel like I know a little bit about what I'm talking about, but I'm not a licensed financial advisor or anything. So make sure that you're doing your own research and you're considering the fact that everything I say in this video is just for information and entertainment purposes. But I'm going to teach you every single thing that I know when it comes to this and everything I told you in the beginning of this video. So let's first start here. I've been running a Telegram channel for the past 6 years. Most of you are already in there. If you're not in there yet, it's just the first link in the description. I'll just put it in the pinned comment too, but it's essentially just where I share my analysis every single day. So I share my analysis here in this free Telegram channel, and it's essentially just me drawing arrows on the chart to show you what I think will happen. So for example, like this is December 30th, posted this on USD/JPY, this on Euro USD, and these are all lower time frame scalp trades. And what I'll do is I'll put the arrows in place on the chart, so that way people can kind of see the before and after. You'll see I don't call the exact trades in here. I call the exact trades that I take in my Discord group. It's called the MFX Nix Trades group, and it's where I just call all the entries and stuff and the exits with the stop loss and everything, stop loss and take profit. But I do share all the analysis in here before and after. So I think it would be a great place for you to learn. And then if you just want to follow my trades exactly, then you can. That's my dog, Ruby. I do this stuff like, before and after, like Euro USD. And then I post the after. See, like this was Euro USD before, that's UJ after. Euro USD worked out, that one didn't. You can sometimes see if I took a trade, you can see the little arrows there on my chart terminal. But there's a lot of value in here for free. And it puts to use a lot of the things that you're going to learn here in this video. What's really important is that remembering that this is not going to happen in one day. It's not going to happen overnight. It's going to take some time, but it's going to be fun for you to do this. It's going to be fun for you to finally be able to sit down at the chart and start to really actually get kind of an intuitive feel of what's going on. You're going to be able to look at price action and start to kind of feel what you think is going to happen next. And you won't be able to explain it. You won't be able to say exactly what the reasons are or why, but you will be able to have that kind of a feeling of what will happen next. So far, since I started calling day trades in my Nix Trades group, I have had a little over a 70% win rate. This week, for example, we took 3 trades, and one of those trades was a stop loss, and 2 of those was a winner. So we came out on top plus 1 unit of our profit. So if you would have risked $1,000 per trade, you would have come out $1,000 profit this week if you were following my trades. And I also call swing trades in there as well, though they're a lot less frequent because I just wait for higher quality setups. So let's actually go ahead and get into it after you've joined the a Telegram channel right now. You can just kind of scroll through all that to kind of see everything that I'm saying here in this video. And we're actually just going to go to the charts. Now, whenever it comes to scalping the Forex market, I trade two pairs, and I'm going to share with you why. So the two pairs that I trade is USD/JPY and Euro USD. And the reason that I trade these two pairs is because they offer, in general, the smallest spreads for the biggest amount of pip movement. So for example, if you had a currency pair that goes sideways a lot and ranges a lot, and the spread's high and there's not that much of a pip movement relatively, and the commissions are maybe even higher, then you get yourself into a situation where it just becomes a little bit harder to trade that pair. And then you get yourself into a situation where it becomes like almost impossible to try to scalp that pair. Because if your spread's like 5 pips, like to break even, you have to go into profit 5 pips. If your profit target's only 10 pips, then half of that is just has to account for spread. Then it has to move past that even further to hit the target. It just becomes harder. For example, I trade with Forex.com, the broker. I'm not affiliated with them and I don't get anything for promoting them, but I trade with them because I'm here in the United States. And with their leverage and everything, their margin requirements and everything, Euro USD and USD JPY tend to perform the best. The spreads are usually pretty small, and I still get a good amount of movement where the spread doesn't take up too much of the actual trade. And if you're wondering what account I trade with on Forex.com, I use the one where there's like no commission, just the commission-free account. You can get one where it's smaller spreads, but then you pay a commission, but it works out to about the same like dollar amount that you end up paying after they take away, the spreads from just the spread only account. So that's how I do it. That's why I trade Euro USD and USD JPY. Trading anything else like AUD JPY and GBP JPY, NZD JPY, and the same thing with USD pairs, right? I trade Euro USD. You could trade GBP USD, AUD USD, NZD USD, but all of them are pretty correlated overall, right? Like if there's a news event that spikes the dollar one direction, all the pairs kind of do the same thing. So it's just logical, and it just makes sense to just pick the pairs that you think capture enough of the market movement and then just scalp those. Another thing is that it makes it to where you start really kind of developing like a relationship with those pairs. Kind of like if you get close to God, you develop a really good relationship with God. You're talking to God every day. You feel like God has his fingers on your pulse and he always knows what's going on. It's the same thing in the Forex market and any market whenever you're day trading. By watching everything over and over, right, you'll see USD JPY gets to like a 1 hour resistance zone. And so you kind of remember that. Then you go to sleep and you wake up the next morning and it's kind of rejecting the zone. So you think it might fall off there and you remember all the context that's happened. It just gives you more of a feel for what each pair is doing. And I will say it's radically different than just opening up a random pair where you can't even remember what the chart looked like, even though you looked at it just yesterday, but you've just looked at so many charts that you don't even know what's going on. And then you look at one pair, like a pair, and then you just don't know what's going on. Yeah, like you have to like look at the price action, this and that. By trading just two pairs when you're day trading, like me, you could do one pair, you could do 3 pairs, it doesn't really matter. But by just focusing on maybe like one to a few pairs, it allows you to really start to know those pairs very well and just have like the full context, right? And you can just really focus on exactly what you think is going to happen. So that's what I do. So, for example, if I'm looking at this, I will give you an example of a type of trade that I might take, right? So right here, whenever I go to this chart on the 1 hour, a lot of my analysis is really, really simple, right? It's generally just like horizontal shaded rectangles that I just call zones that I use to represent support resistance zones. And then I just draw arrows on the chart, just indicating which way I think price will go. So for example, if I were to look at this chart right here, I wouldn't really go out like this far where you're just seeing all this, right? I kind of focus on what's happened near price. It's also not useful to go too close like that, right? Because then you can't see many of the previous highs or lows or reference points. But I just go to a portion on the chart where I think that, like this is enough data to kind of work with to get trading ideas. You'll also notice, like, even though I'm day trading, scalping, trading the lower time frames, I'm still on the 1 hour chart right here, right? At least for starting off. So I start off here. and I'm just going to draw resistance zones right there. Now, why did I draw this resistance zone? Just because in this general region, it looks like price has tugged away from it a couple times, right? Now I could also draw one down here because we've had price have nice clear bounces twice. So some people, they would drag the zone a little bit more like that, right? They would say this is the actual zone. Some people would just encapsulate the whole region. What I've noticed is that if you just keep it really, really simple, you can also see right there on the screen that my mom is calling me. I'm really being a real man here, and I'm taking the time to do this YouTube video first, even though my mom is calling me. So Mom, if you watch this video and you're seeing that you called me while I was doing your video, I'm sorry. I have to make the video first. So what I'll normally do right here is what seems to be kind of the obvious answer is generally the best one, right? So Occam's razor says the simplest explanation is usually the best. It's a philosophical thought process where if you're doing this and you're having to say, well, that went far up there, but then it went above kind of and then came back, and maybe this was support, but then it found resistance and came back, but then it was resistance again, but it went kind of above the zone there, really deep into it. If you start having to do too many thought assumptions, what I call is I call that mental gymnastics, right? When you have to use a lot of different thoughts and justifications and points of contention and assumptions to make something seem like it's true. What I like to do instead is just say, what appears to be obvious? And once I have that, then I'll draw that there, right? So some people will look at whether or not they think price is in a trend. And if it's not really obvious to me, I just don't have an opinion. And while I can't, advise you on anything because I'm not a financial advisor, I would suggest in general that more traders start to just wait for things to be very, quote, obvious to them before actually coming to any type of belief or assumption. I think that keeps things much, much simpler for the trader. And I also do really believe it makes a lot of people pick better trading opportunities that are not based in a series of abstractions that they don't even know are true. So, yeah, not making too many assumptions and just doing what's obvious. This just looks like obviously a region where price keeps bouncing downwards, so I draw that there. This looks like a region where price bounces upwards, so I draw a zone there. You won't see me drawing zones like this, right? Where you're trying to technically price bounce there, and then now it's resistance there, and it's this and that, but price goes back and forth over it. I just generally won't do that. Why? Because there's no need to do that. When something is really, really simple, and you have a very clear area where price has bounced there 4 times, and price has bounced here at this lower zone 2 times, it just makes things so much easier for doing your analysis, right? And then you can just relax and just wait stress-free for a trade that you think is much better. So this was on the 1 hour chart. Also, something to just keep in mind is that price does look like it's kind of angling upwards. Now, what does that mean? Does that mean we're in an uptrend? No. But does it mean that for some reason, we're not going downwards? Yeah. Price went up here, bounced off the resistance, but this low didn't get all the way back to that low. Typically, a downtrend or a range is characterized of price moving all the way from the highs to at least the lows, and then it starts to become a downtrend if you have enough times of price breaking the recent lows and making lower highs and lower lows. In this case, right, we're not making any new highs per se, but price isn't really knocking out the previous low. And then if you really start looking a little bit more, right, price goes up, comes back, that low right there couldn't knock out that one. Then we make a little higher high up here, price comes back. You can see at this moment in time, we haven't really knocked out that low. So this kind of just gives a little bit of a case of hey, maybe price is just moving up. Maybe it's trying to move up. Perhaps there might be a breakout to the upside. And maybe it'll break out and then fake out and come right back in and everything like that. But hey, that's what you have risk management for. To day trade, I use stop losses. You can do this using any risk structure though. If you prefer to use hedging, or you prefer to use dollar cost averaging, which is just adding to losing trades and making sure that you're sizing appropriately in case you get yourself into a bunch of recovery trades. If you use adding to winners as a risk structure, there are so many things that you can do, right? I find that if this one statement is true, then it's all you really have to do. And this statement is if you're trading with stop losses using a 1-to-1 risk to reward ratio and your win rate is above 55%, you will be profitable. And I'm not saying that as a conjecture. I'm saying that as a statement of fact, right? Even after commissions and swaps with most brokers, if your win rate is above 55% and you have a 1-to-1 risk reward ratio and all your trades hit the take profit or the stop loss, then yeah, you're profitable, right? So what this means is that you only have to be right just a little more than half the time, right? You win a trade, lose a trade, win a trade, lose a trade, win a trade, win a trade, then you lose, then you win, then you lose, then you win 2 times, then you lose, then you win 3 times, then you lose 2 times, then you win and lose. If you just get that win rate, just like slightly above 50, right? 55 to 60%. Me right now, it's 71%, 72%, something. Then what this allows you to do is you don't have to do all these crazy things to try to make the risk structure make you profitable, right? If you just get enough experience to see the same things happen over and over again, and you're just right a little more than you're not, then everything plays out. A thing that I'll also say is important is if you're trying to compound your account, right? You have to ask yourself what your risk tolerance is, and you also have to ask yourself what your average losing streak is. Because the only reason for risk management is because you're going to lose a trade at some point, right? And you will, in fact, lose multiple trades in a row at some point, and you want to make sure that you're probably not going to blow the account when that happens. If you have a 55% win rate and you're risking 30% of the account per trade, it's not the best idea because at some point you're probably going to have a 3-trade losing streak if you take the next 100 trades, and that 3-trade losing streak is going to blow your account. So that's probably not the best way to do it. If you have if you are risking like 0.1% per trade, you're probably never going to blow the account, but you're also probably minimizing your profits, right? If you lose 10 trades in a row and you're risking 0.1% per trade, 10-trade losing streak is only 1% down on the account. That's fine. There's nothing wrong with that. But you're probably leaving a lot of money on the table, and it's probably unlikely that with a 55% win rate or more that you're going to lose 10 trades in a row. So I would suggest that you just risk whatever your risk tolerance is. And as you get more experience and more data, you start to kind of see the parameters and metrics around your trading. You can start to kind of feel like, okay, what's a good little sweet spot? Like I shouldn't risk 30% per trade because I'm going to have a losing streak at some point that would blow the account if I did that. But I also don't want to risk like 0.25% per trade because I'm leaving a lot of money on the table, right? So say you find that your worst losing streak is like 5 trades in a row. Out of 100 trades you take, 5 trades was the worst losing streak. So you ask yourself, let's say I had been risking 1% per trade during that time, and then that 5-trade losing streak came, and you lost 5%. So that's a 5% loss. That's not that much, right, percentage-wise. However, if you can average about, say, like 1 unit of profit per week, which sounds very low, but if we're just being realistic here, making anywhere from like 1 to 2 units of profit per week is phenomenal because all you have to do is increase the dollar amount risk. And if you know your stats and metrics, then you have a profitable approach, like effortlessly. So risking only 1% per trade, that might give you, let's say that's like 4R per month. We'll just round it up to 5R per month. 5 times 12 is 60. You come out 60R per year. So if you're risking like, for example, $1,000 per trade, you just made $60,000 for the year. And that's only coming out just barely better than 1R profit per week. It's phenomenal, right? And this is with barely more than a 50% win rate. So it just gets better and better as well if you take more trades and if your win rate goes up to something like 60% or 70% or something like that. But knowing that over the course of a year, say like your worst losing streak is generally 5 trades, sometimes it'll be less, sometimes it'll be more, right? It just depends on your metrics. Then it allows you to trade comfortably based on what your risk tolerance is. I wouldn't worry about growing the account particularly. I would worry more about what your risk structure is and what you're comfortable with and what's realistic. Because if you do that, you're way more likely to join like the 10% or less of people who are profitable. A lot of people who are not profitable, it's just because of their risk management. Among many other things, risk management is right there near the top of the list, right? They're just funding a $100 account and then entering a 1 standard lot trade on Euro USD, and they have no clue what they're going to do if they're wrong. If it goes against them, how they're going to manage it. And then in 10 pips, the account blows and they just fund a new account and they just try it again. And then trading never works out for them. If you're approaching it in a systematic way, like I'm explaining, then it gives you so much more leverage and freedom to be able to consistently, realistically make profits long term. We're not talking about you growing a $100 account to $1 million, right? We're not talking about you flipping a 10K account to 20K in a week. We're talking about what is realistic, like what is actually probably going to make you money, right? And this is the case that I'm telling you right now. So whenever you're choosing your risk structure, me personally right now, I'm only risking $250 per trade because I was just testing this for a month or two to ensure that I could call these trades out live in the Nick's Trades group. And so far it's been working phenomenally. It's been working like effortlessly. And I'm likely going to increase my risk to around 2% per trade, which is about $1,000 per trade. And I'm going to start doing that. So yeah, it's going to be a lot of fun, but you get to choose what your risk structure is for this. So let's say you have a trading idea, right? You found the resistance, you found the support, you look at everything, you tell yourself price has gone, it looks like it's in an uptrend and it's kind of gone sideways here, but it's failing to knock out the recent lows. Instead, it's just making higher lows. And so you have an idea that price is going to go up, right? Now, a person could just as easily make the argument they think price is going to go down. They're looking at the chart and they're seeing prices hit the resistance zone a couple times and not gone past, so it's going to go down. So how do you know? Here's the first step in where you're starting to create your own trading approach, to trade logically and to trade in a way that makes sense. The first step is to just start getting experience by looking at the chart, and then with no real analysis or explanation, ask yourself, which way do I feel like price is trying to go? Now, in general, if you give it enough trades, you're not going to be right more than 50% of the time, right? It'll probably be 50-50 because the market just goes up or down. So you can actually be a break-even trader by just randomly entering trades with a 1-to-1 risk-reward ratio. And given enough trades, your stats are going to average out to about 50%. But what's interesting about doing this is when you do this, right? When you look at a chart and ask yourself, like, what do I feel like this is going? And then for some reason you feel like, it looks like it's trying to go up. I think I'm going to do that. By just entering a trade there, putting the stop loss wherever you think is logical, dragging the profit target to a 1-to-1 risk reward ratio. Whatever happens for that trade doesn't really matter. What's most important is seeing what your decision was and then what ended up happening in that trade after you made your decision, because this gives you so many beautiful things. For one, it gives you context. You're able to start seeing the relationship between, okay, when price is at a support zone, then it starts bouncing and making higher lows, and it starts breaking one of the recent highs that it made. Usually that'll go up for a bit. It also allows you to say when price gets to a resistance zone and quickly snaps away. If I enter right there and put a stop just above the zone, target at a 1-to-1, those will usually fall pretty quickly. You start being able to make decisions. Like if I get into a trade and it starts going sideways for like a couple hours or like a day or two, those usually aren't going to work out as high a percentage chance. So I can just close those at like break even or a small profit, small loss. By just literally looking at the chart, asking yourself which direction you think it's going, and just buying or selling with a 1-to-1 risk reward ratio based on whatever you feel, right? You don't even have to have any analysis. It gives you so much experience. It allows you to see things happen over and over again. It'll also start building your confidence, because what you'll start to notice is, say you've done this for 50 to 100 trades. You get to your 101th trade, and then you're like, okay, I think this is going to go down. I think it's going to drop. I don't really know why. I just feel like, maybe it's come here to the support, tried to bounce but failed, gone down again, tried to bounce again, but now it's making like lower highs. I just feel like this is going to squeeze through the support zone. It's just going to break down below the support zone. So you choose to enter a sell. You put your stop above the recent highs that have formed there on the lower time frames. You just put your target at a 1-to-1, right? So if price just breaks down past the zone, you hit the target. And then lo and behold, it plays out, right? And let's say that you did that, and at the same time there was another trade, right? Maybe this was on USD JPY, and you look at another trade on Euro USD, and you see that okay, price looks like it's in a range, and it could make a higher low here and continue to the top of the range, or it could come all the way back to the lows of the range. And so you're trying to decide, which way do I think it'll go? and you can't come up with anything that you're confident enough about, right? You're looking at it and you're like, I don't really know. It could go to the top of the range or the low of the range. Maybe I'll just wait for it to get to the bottom or top of the range, and then I'll watch price action there to see if I think it's going to break past the highs or the lows of the range. And then you can either trade a bounce of the support or a bounce of the resistance, or you could even trade a breakout if you think it's not going to bounce. If you think it gets there and then it just goes sideways, you can just trade a break of the zone. So instead of taking a trade on Euro USD, let's say you don't take a trade, right? Because you're like, I'm just going to leave this. Nothing looks good to me. And you realize that, like, you look back after USD JPY hits the profit target and breaks below the zone, you were right. And you're like, okay, cool. You go back and look at Euro USD and it's still going sideways, right? And then you close your laptop, put your phone down, you come back a couple hours later, and then you realize that Euro USD actually went up, and you thought it was actually going to go down to retest the bottom of the range. You were kind of leaning that way, but not enough that way to take a trade. And so you end up seeing that, okay, price went up on Euro USD. Had I taken a sell, which was your original idea, like, I would have lost that trade, right? It would have lost. So you get able to start doing these more and more. You're making these little context-based, intuitive, discretionary decisions. And it's based off this like feeling you have of just seeing the same thing over and over again, right? This is the beautiful part about it, is that you don't need a strategy at all. You don't have to look at the market through a sort of lens of like, okay, step 1, find a trend. Step 2, wait for a pullback. Step 3, enter on the pullback. Step 4, you don't have to do any of that. You can be really creative, and trading can be this thing that becomes very fun and very rewarding because nobody else will be able to trade just like you. You're looking at the chart based on what you see contextually, and then you can make decisions that you think are best given what that context is, and of course given your experience. So how would we structure a trade like this if we look at this chart and we think price is going up? Well, it would be very simple. You enter wherever you think is a good price to enter. You put your stop loss at a location where you think price would be unlikely to go to should it continue that trend. If price is going to continue up, then it's probably not going to break any of those lows. I don't use trend lines, but I was just showing you for the sake of this. Like, that's all the higher lows are going up. So it would have to break this low right here, and it would also have to break this low over here. And, that's what would have to happen for it to lose. So, and then for this trade to win, it need only barely break above the resistance, and then you've already got your profit target, right? So this is a risk to reward ratio of 0.82. So we'll drag the profit target up to there, and you have a trade. So whenever you're finding these trades, what you'll realize is that even if you have no clue what you're doing, right? Even if you just start with the mental expectation that you're like, I don't really care what happens. Like, I'm just going to place trades that I think, it's going to go one way or another, and I'm just going to see what happens. That's all you have to do. So for you to duplicate what I'm doing, like in an actual real way, it is so easy for you right now, because all you have to do is just take random trades that you think are going to work out. You don't need any analysis. You don't need any explanation. You don't have to jump through all these hoops of complex trading strategies and mental gymnastics and baseless assertions and all this stuff just to try to come up with a reason why you think it's going to go up or down. At the end of the day, price is just going to go up or it's just going to go down, and no one knows exactly what will happen. Even if you have more than a 50% win rate, you still don't know every time where price will go. I lose about 1 out of every 3 trades with my current win rate, and every other trade I either break even on, or I have a small profit, or I have a take profit hit. And so with this being the case, it becomes very comforting for you, because you're no longer trying to desperately follow a system and wondering if you're doing things right or wrong, quote unquote, because there is in fact no right or wrong in trading. Everything works in the right context. It's just up to you to kind of learn all the little nuances and get enough experience to know how to properly apply certain types of methodologies. The cool part with this is you don't need anything, right? All you need is just to watch price over and over and over. And once you get enough experience, you'll be able to start predicting just a little more than half the time where price is going to go. And if you're risking tiny amounts per trade, let's just say like 1% per trade, that even on like a 5 trade losing streak, right, where you're doing so bad, that's only 5% of the account. It doesn't come anywhere close to blowing your account. And that's cool, right? If you risk less, then it's even better. You risk 0.5% per trade, 10 trade losing streak, or 5 trade losing streak is only 2.5%. If you're risking 2% per trade and you lose 5 trades in a row, then you're 10% down, right? It's really up to you and your risk tolerance. But you just go to the chart, pick a trading idea, and then, if you think it's going to go up or down, just buy or sell. Use a 1-to-1 risk reward ratio and watch things play out. The great part about doing this is that, in my opinion, given enough trades of just doing this 1-to-1 risk reward ratio, entering based off whatever reason you think, and letting it play out over enough trades, you're going to roughly break even, right? You'll be somewhere in the win rate of like a 45 to 55% win rate. So about 50%, right? Half the time it'll go to your target, half the time it'll go to your stop loss. This allows you to start seeing the same stuff over and over again. So that way you can start kind of like withholding taking certain trades that you think are less likely to work out. And then in fact, you can start taking other trades that you do think are likely to work out. So this kind of increases your win rate. That's the beautiful part about it. We go to Euro USD. I'll show you a trade that I took. So price had come down here, made this huge lower low. Generally, after price makes a huge low like this, we just see it pull back, right? And this is not any professional, like super secret institutional, trading information. This is just based on the fact that, when price goes really far down, it generally has a pullback upwards. And then when it has a pullback really far upwards, it generally has a movement back down. And then when it goes really far down again, generally you see, people taking profits and people buying, and price kind of bounces up. Price just kind of like zigzags up and down, whether it's in an uptrend or a downtrend or a range. It just flies around back and forth. So with that very simple logic, right, price went down. I thought that at some point price would be bouncing upwards. So what I did is, as price started bouncing upwards, I went down here to the minute 5 chart, and on the minute 5 chart, I had all these recent sets of highs right here. So what had happened is price went down here. I thought, okay, in general, I think at some point price will move up. And then price started to move up a little bit, made a higher low here, a higher low here, came back, made another set of higher lows here as price was going up. And then it came up into this resistance zone and it failed to drop, right? It came here to the resistance, but no one was selling. It just started going sideways at the resistance zone. This made me think that, okay, maybe price is ready to move up, right? And there was just a couple reasons. Like price made a huge low, and then it started making little higher lows in lower time frames. Then it went to the recent little resistance zone and just started going sideways and wasn't dropping. All of my intuition experience came in and jumped in and said, this looks like it's probably going up. So what did I do? Well, it wasn't really a super complicated trade. I just bought. This is Euro USD. This is the 15-minute, I believe. Yep, 15-minute chart. I just bought, right? So it had broken above the highs. I bought. I put a stop loss below the recent low down here, and then a target of just 1-to-1. And what ended up happening after that? This was the after. Price ended up going sideways for a little bit, but continued to make higher lows, and then went up to the profit target. So that was that. You'll also notice that all the trades I take are the same, right? This was last week. These were all the trades that I took last week. You can see I thought USDJPY was going to go up from here. So I bought, and I had my stop loss below the zone, and I had my target here at the next resistance zone. So what happened here? If we scroll down, you can see this one stopped out, right? So it stopped out. And one thing about like trading this way is when you know what your stats and metrics are, even if it's just 50%, like roughly every other trade is going to be a losing trade. And you're going to get series of like maybe 3 winning trades in a row or 3 losing trades in a row. So every time you lose a trade, it kind of allows you to not really think too much of it, right? When you win a trade, you're like, it could have been a loser, but I won. Cool, move on to the next one. When you lose a trade, you're like, well, that one could have been a winner, but it was a loser, and that's fine. You keep going. You end up not associating yourself too closely with the outcome of each individual trade, but instead, you end up looking at like a basket of like 10 or 20 trades and thinking, after 10 to 20 trades, I should be able to be in profit, like a couple units of R. Let's say you have a 60% win rate, right? With a 60% win rate, your average expectancy per trade is about 0.2. So what this means is that after every 5 trades you take, you should find yourself in profit 1 unit of R. If you take every 10 trades, you should find yourself in profit 2 units of R. And you can do a very simple mathematical calculation. If you take 10 trades and then you win 6 of them, 60% win rate, but you lose 4 of them, you've made 60%, you've won 6 of them at 1R each minus the 4. So 6 minus 4 is 2. You came in profit 2R. So you know that after a series of few trades, right? Not 2 or 3 or 5, but more like, at least 10, usually 20 is probably a better thing to look at. After 10 to 20 trades, you're probably going to be in profit net because, you'll win 1 trade, lose 1, win 1, lose 1. And then every now and then you'll win 2 trades, right? Then you lose 1, then you win 1, you lose 1, win 1. And then you just keep doing that way. And even with a 60% win rate, you have a very high statistical expectancy of making a profit, even after just a basket of trades. So I lost this trade. I didn't think twice about it. I just thought, no, it looked good. It broke above the zone. It was making higher lows and higher highs. I bought, and then it, just went down and broke the zone and hit the stop loss. No big deal. So you can also see in the group, I put the cumulative P&L. So what I'll do is I'll call trades by just putting the screenshot. I make it very simple if you're considering joining Nick's trades and you just kind of want to know how I do it. I just post the screenshot, right? That's the screenshot there of the USD/JPY trade. And then whatever occurs after, I post a screenshot of what happened in the aftermath. And of course, if I'm closing it manually early, which I do every now and then based on the context, most of the trades just hit the target or the stop. But if this one hit the stop, for example, I went in here and I put UJ stop loss minus 1R. And then I put the cumulative P&L, which in this case was plus 3R. So that was that trade. So then we had this right here. We had USD/JPY in the minute 5. I thought that price was going to go up. Now, why did I think price was going to go up? We'll go here to USD/JPY and I'll show you. So price was right here on the chart. There was a little resistance zone here on the minute 5 chart. What I had noticed is when price had this movement up here from the low at 1 hour support zone, it had pulled up right here, and then it pulled back, but it couldn't make it all the way down here, right? For some reason, there were buyers before it even got to supports, and it actually just made a higher high. So then what happened is price came back here, and then it couldn't even break that recent low, and it made another higher high here. So a higher low here. And so what I was looking at is I thought, you know what? This just looks like it's going to go up, right? Given the totality of the circumstances, watching it over the past couple days, noticing it's making all these higher highs, it's trying to go down, but it's making higher highs and higher lows. I just thought, this looks like it's going to break above the zone. So what did I do? I entered a buy there, right there at the zone. It was, some people will say it's not a great idea to buy at resistance, but if you think price is going to break resistance, then you buy at resistance. If you think price is going to break support, then you buy at support. It's no big deal. People are crazy, right? Price just goes up or down. It's all based on your experience. So I bought right there, and that's how I called it out in the Nick's Trades group. And then this was the outcome. Price ended up going up. You can see the entry arrow with the closure arrow, and price was able to hit that. And then, then it was a profitable trade. Then you see I put UJ take profit plus 1R, cumulative P&L is plus 4R. I only started doing this a couple weeks ago, I think 3 weeks ago. So on average, I'm coming out on top 1 to 2R per week. So then what happened is there was another trade here. You can see right here. This was that last one, that Euro USD trade. I just called it out here, right? On the January 2nd at 7 p.m. Thought price was going up, so I bought. And by the time I had screenshotted it to the time I posted it in here, which was 10, 15 seconds, price had already actually gone down a bit. So a lot of people who took this trade got actually an even better entry than me. So price went down a little bit. Then the next day, I woke up at 7 a.m. and saw that this had hit the profit target. So then you see me down here, I put EUTP plus 1R. So the cumulative P&L was plus 5R now. And, that's where we currently sit right here for this past week. So what I'm saying here is that whenever you're looking at the charts and you're trying to find out what your trading idea is, I do believe that it's really important for you to just look at the chart in a super simple, logical way, right? By logical, I mean do what makes sense to you personally, because there's going to be this thing called subjective logic in trading. There is objective logic where, if you take a set of facts and put them all together, then it means that another fact must be true. Subjective logic means if you take a set of experience and put it together, which is all the experience and context you gain in your trading journey, then you can make a logical decision. Even though it's subjective and all based on your personal experience, you can make a logical decision to do something or to not do something. And that's just called using intuition or discretion. And when you're doing that, what you'll notice is, while I can't guarantee you anything, obviously, I've noticed many people over the thousands of people that I've coached that the more experience they get, the slightly better they get each time, right? As with each week and each month that passes, they start to make some progress. They start to kind of be able to pick out which trades are more likely to work. They start to be able to pass on trades they don't think are as likely to work. And they keep on building this over and over. And it's so important to remember that even if you're just right, barely more than half the time, with a risk to reward ratio of 1-to-1, then that means that long term, you're just statistically likely to be profitable. Even if your win rate's only like 60%, right? If you know that on average, out of every 10 trades, you come out in a 2R profit, that's amazing, right? And that you're going to be losing trades all the time, but you're going to be winning just a little bit more than you lose. And the other beautiful part about this is it makes trading more easy psychologically, because you know that, like, when you have a loss, you have another win around the corner. And when you have a win, you have another loss around the corner. So you just get used to winning and losing all the time. And every now and then you get kind of lucky and you win a couple trades in a row. And that's what ends up being, that little win streak is what ended up making the last 10 trades a profitable endeavor. And then you keep going to 20 trades, 30 trades, 50 trades, 100 trades. You get to the end of it, you get to the end of like 100 trades and you come out on top, 20 units of profit. If you're risking $1,000 per trade, that's $20,000, right? Even if you're just risking $100 per trade, you get to the end of 100 trades with a 60% win rate and a 1-to-1 risk reward ratio, you've made $2,000. And again, this is just with $100 risk per trade, with the likelihood of blowing the account so low that it's not even worth, considering it, right? Because if you're using like a 10K account and then you're risking $100 per trade, about 1% per trade, then you're effectively, I can't guarantee anything, but just, statistically speaking, you're just very unlikely to blow the account, because you'd have to lose 100 trades in a row and not win a single trade to blow the account, not even counting if you've grown the account in profit before you have a 100 trade losing streak, with which a 60% win rate is just so statistically unlikely that it's effectively, you're able to just kind of casually ignore that and just keep on trading. So it's beautiful in the sense that whenever you go to these charts, you start to realize that they're not just candlesticks on a screen. Every currency pair that you go to tells a story. It tells you a story of buyers and sellers fighting for which way price is going to go, right? You look back on things like this and you see there were buyers and sellers here and price made a new high. And then at this new high, there were some sellers, but then buyers quickly pushed price back up to make a new high. Then it went sideways, tried to pull back, but then buyers quickly came in and made a new high. And so then it starts making you feel like, well, this just looks like an uptrend right here. So then it pulls back, it starts breaking up, and then you may like, you're on the low. This is the 1 hour. You see the next candle get painted right here. And then you go to the 5-minute chart and you're watching, you're like, okay, this is the 1 hour uptrend, but now we're on a pullback on the lower time frames. And then you start noticing, like, okay, there's this recent little zone here. There's a recent lows right there. So if price breaks that, we're still in a downtrend. So price broke it, but then it comes back up. Then it starts bouncing and it fails to make a new low. So now you just kind of maybe extend this low and say it didn't break that. Now you want to see if it breaks that area. So it does break that area. So then you buy. So you say you buy on the breakout, right? You can buy before the breakout. You can buy on the breakout. It doesn't matter. It's up to you because you're just getting experience. And then you say it's not going to break that recent low if it's going to continue in an uptrend. And that's your stop loss. Your profit target's right here. This is also good because you're not trying to be a hero and target like a new high. It just has to get to the previous high, right? And even before that. And if it does, it wins. So then you just let it play out. You kind of watch it. You're looking to see price makes a higher low there. Then it makes a new high. Pulls back, makes another higher low, and then another new high. Then it comes up, pulls all the way back, but you know the totality of the analysis is still valid. So you just hold the trade. And then eventually, price ends up stalling up here, breaking the recent high, and it goes and hits the target. Now, This is just a trade that won, right? You're going to have the complete opposite happen where you did everything this exact same way, right? You put the whole picture together. You were like, this looks like a range, or this one, in this particular example, looks like an uptrend, price is pulled back. Then you go to the lower time frames and kind of wait for those recent highs to get broken out of. You're watching price action. It's refusing to go lower. Then it cracks the recent high, comes back and tests that as support, starts to bounce. You put all this together and it becomes a lot of fun, right? And it also, like, it's so logical and it just makes so much sense to trade that way because you're trading based on your understanding and experience and intuition and feel of price action. Instead of trying to just pull some sort of outlier of a trading strategy and then like overlay that onto the chart and just look for I only wait for it to come to the 10 moving average and I sell. Right? There's a lot of context that's just not there. And it also, it forces you to think in like a simple-minded way. I would kind of suggest it even forces you to think in kind of an absent-minded way, because then you're only looking for setups that fall within a set of criteria. And those criteria are themselves subjective because everybody's going to interpret those trading rules differently. I just think it's better to just look at the damn chart and ask yourself what you think is going to happen. Because if you do that, you're able to actually start accounting for little contexts and nuance. You're able to start accounting for price is at a major support zone, but we've already tried to bounce here 3 times in the past. And now on this bounce currently on the 5-minute chart, price is just making lower highs and kind of dwindling out, going sideways here at the zone. A lot of people call that a dead cat bounce, meaning it's like it hits the zone, but then it barely bounces. And it's just kind of like the zone is dead, right? There's no TNT there at the zone where price hits it and explodes upwards. Price just comes into that support zone and starts kind of going sideways. So then you start thinking we're at support, but your trading strategy is not just black and white. Like I buy at support, sell at resistance. Instead, it's kind of no, it is at support. So I'm gonna keep that in mind. But on the 5-minute, it doesn't look like it's bouncing here. It's not breaking any of the recent highs. It's actually making lower highs and it keeps going sideways here into the zone. I actually think this is going to break the zone. So then you sell. You put your stop above the recent highs and you put your target below the zone, and then boom, it hits your stop loss, right? So and that happens. But on the other 2 times that you do that, so like 3 trades total, you do that another 2 times, and on those 2 times it works, right? You enter your sell, you put your stop, put your target, then it goes to your profit target twice. So out of those 3 trades, you lost 1, but then you won 2, you still came out in profit, 1 unit of profit, so 1R. And with that, you just do that enough, given enough trades. That was only 3 trades. You give yourself 30 trades doing that exact same thing, and you come in and profit 10R, right? If 3 trades brings you 1R and 30 trades in a perfect ratio brings you 10R after 30 trades. That's crazy, right? You keep doing this over and over again, you're able to start trading in such a way that is so interesting. It's almost like you're an artist, right? A lot of people call it chartist. You're a chartist. You look at the chart in an artistic way. And you're able to put things together in a way that only you can based on your experience. Nobody else can come and tell you you're right, and nobody else can tell you you're wrong. All that matters is, what you see and what you do. And after you've developed enough of that experience, then it really does help you be able to make better trading decisions. If you want to develop a lot more of that experience and you would like my help, then I suggest you join the Nick's Trades group. It's a monthly subscription, but in there you get to literally follow all of my exact trades, and that really does help build experience in a lot quicker of a way. The other beautiful part is that a couple days out of the week, on the weekday, if the market's moving, I start a live session. And I do this around 7 a.m. Central Standard Time right now, just because that's when I wake up and that's when it's the morning here in Texas and I've had my coffee and everything's going nicely. So, and on those live sessions, we stay on from anywhere from 1 to 3 hours, and we'd live trade on the session. Sometimes I'll take a trade and I'll call it out in the Nick's Trades group and I'm on the live session. You can ask me questions, you can get feedback, you can get thoughts on what you're doing or any tips that I think would be good for you. It's a really great place to learn and build experience, and you can get exactly what you want out of it, right? If you're wanting some coaching and you're wanting to ask me some questions, then you have the live sessions in MFX Nick's Trades for that. If you're just wanting to follow my trades and nothing else, then there's just the Discord server, and it's plain and simple because I don't write out all the trades in a complicated way. I just post a screenshot of my trading terminal showing everything the moment I take a trade. So as long as you have your notifications turned on, when I call a trade in the Nick's Trades group, You get a notification, you look, all you have to look at is one piece of information. It's just a screenshot, and you can see everything there. And then in that screenshot, you can then decide, if you would like to take the same trade and what position size you're going to be using and things like that. So there's a lot of value there if you're looking to build this experience that you're already going to have to build. If you just want to build it quicker, then I think the Nick's Trades group would be a great option for you. And if you don't want to join, then my YouTube videos here, my free Telegram channel, those are good enough. Those will help give you a lot of the things that you need to get going. But if you want a little bit more, I do recommend the Nick's Trades group. If you made it here to the end of this video, here's what I'd like you to do. Go into the comment section of this video, and somewhere in your comment, include the numbers 555. Just those three numbers all in a row, 555. You can work it into your comment kind of like creatively. Like you'd be like, Nick, I've tried other trading approaches 555 times, but I wasn't able to get them, and now this one works or whatever. But include that number somewhere in your comment. This does two things. Number one, it just lets me know that you watched to the end of the video, and it's even better if you hit the like button, if you're able to have the time to do that. That's the first thing. It shows me you made it to the end of the video. But the second thing is that to everyone who makes it to the end of the video and puts that number there, that tells me that it's somebody that I should respond to. So generally within the first 24 hours, I'll respond to most people. So if you have a question in your comment, put that in your comment there. And even if you're not a client and you're just somebody who watches my videos, I'll generally take a little bit of time to respond to you to, try to be useful and help you out and stuff. So, yep, 555 is the number. Put that in the comment somewhere creatively. Then you can ask a question, or you can just tell me like, hey, Nick, love the video or whatever. So if you liked this video, then I'm happy that you liked it. It's really cool that you liked this video because you liked this video. So if you liked this video, then you liked this video, and that's great. And I'll see you in the next one. Make sure you're in my free Telegram channel too. The first link in the description. And I'll also put it in the pinned comment. And I'll see you in the next one, my friend. I'm really excited for you to try this out. I'm really excited for you to get more trading experience. And I really do hope to see you to become profitable, my friend. See you.